what can you tell us? What are people buying and selling?
Yeah, thank you so much for having me, Kelly. So last week truly was a historic week for 401k traders and investors. What we saw was last week, the volume increased throughout the week. By the time Friday hit, it was almost 16 times an average day. And what we saw, Kelly, was that people were leaving equities and moving to fixed income. It's clearly a reaction to the market correction.
Sharon, I mean, do you hear that and get concerned? Listen, I'm not trying to call whether bond yields can go lower because they have defied, people saying they can't go lower for years now. But what do you think when you hear what people are doing?
Well, it's worrisome that they're making these knee-jerk reactions. It's important, though, that they're looking at their 401k. Some people never look at their 401k. So this is a wake-up call to do that. But what they should be doing is really thinking about when they're going to retire. If you're in your 20s, 30s, 40s even, you have such a long time. You should be invested. You should be staying the course. 80% stocks, 20% bonds, probably most financial advisors say. And you should be checking that asset allocation and actually making sure that your contribution rate is perhaps even higher than it is right now, because you don't want to miss that free money with the company match. Right. So if you're taking a look at the 401k, see what you're contributing as a percentage and make sure you're taking full advantage of the free money.
Sharon brings up an interesting point, Rob. Is there any way of knowing sort of what age breakdown we're talking about? Were the people buying bonds, those closer to retirement or those with a long time still?
It really was across all age demographics. And last week was truly historic in that we saw last week's trading activity was higher than we saw in the entire fourth quarter of 2019. So it really wasn't isolated to just one or two people. It wasn't even isolated to one or two age brackets. It was across the board, Kelly.
Wow. So it's not, I don't like responses, Sharon, that won't allow people. Look, if you want to do that, you want to do that. But it is interesting that this surge of activity could come coincident with a near-term bottom. Now we'll see. I'm not, I don't believe that the old saying that this is all dumb money. I don't believe that. I think people are often smarter than we give them credit for. But are there any recommendations about maybe some better moves to make here?
Well, they haven't been necessarily looking at what they're supposed to be doing with their money or what their initial intentions were. And so making these knee-jerk reactions, it's not uncommon. When people get emotional, they make these changes. But a lot of people, research has shown, have said, when I made this decision, I later regretted it. And a lot of these people are people who know something about the markets. They're following it at least, but they went with their gut instead of what their goals really are. So that's something that you just don't want to do. And also those who were like, let me just cash out right now, let me take a withdrawal. Think about the early withdrawal penalty if you're under 59.5 that's going to cost you, the taxes that you're going to have to pay on that money. You don't want to do that. You don't want to forget what your financial goals are. And if it's money outside of the 401k and money that you may need for retirement right now or in a couple of years, then it should never have been in the stock part of your portfolio anyway. You should have had more fixed income.
And yields are so low now. I mean, we talk about the 10-year going below 1% and what's been happening with the kind of bonds people would traditionally be buying. I wonder if you can even recommend those anymore. I mean, obviously, if you're holding to maturity, a little bit different story, but you're still not getting a ton of yield.
Well, a lot of financial advisors are still saying stable value funds are a way to go for some protection. But you just don't want to have too much there, because if you have a long time in retirement or you're a long way away from retirement, you need growth. And for that, you're going to have to be invested in stocks.
All right, Rob, is it quieting down today?
So far, we haven't quite seen exactly what's happening, but we are keeping our tabs on this one. It should be pretty interesting.
All right.